Hello and welcome to another episode of Casual Friday, brought to you by the FTX app. Links available in the description below for all your mobile trading needs, for your portfolio tracking, all that good stuff. We also, again, I say it every week, but it is coming. We have more content based around some of the other offerings. You can see that there's a leverage guide that's ready and raring to go in my folders. We're just finishing up some final bits and pieces before we publish that. But yeah, make sure you subscribe to the channel, to the newsletter as well, trletter.com, and you'll get that as soon as it's out. So plenty more good content to look forward to. For today, we're doing the usual stuff: Bitcoin, ETH, S&P, and crying, and also then going over the news. And there's no shortage of bad news in this market. The last few days especially, it feels like things really went haywire into the weekend. Before we get into that, Don, how are you? How's life? What's good? What's new? What's bad?
I mean, I'm really good. I gotta admit, I haven't really looked at the market since Wednesday. So I'm as well prepared as you can be. But as long as just looking at the charts for the last half an hour or so, it just seems like I haven't really missed anything. Just seems like shitty price action that, no one should really be trading anyway. So all good on my end.
We still seem to be living in this bizarre and unfortunate paradigm where on a now week-to-week level, certainly intra-week level, 20k is like the best resistance level on the chart. And it's like Every rally gets sold into 20k, and that's pretty depressing. I think if we start on the monthly time frame, we won't spend too long there given we've sort of covered it at length. But if you just take the previous cycle high, it's starting to look like kind of depressing on the monthly time frame because the candle closes were like pretty constructive at that level. Then last month, I wouldn't call that a breakdown, but it did close below, right? It's not like one of those dramatic candles, but if you just take the close at face value, it closed below. And then this month appears for the time being, to be like the retest month, right? It opened green, rallied into the level, and lo and behold, that's kind of where it got sold off. So again, all the higher time frame and intraday evidence at the moment suggests that 20k is resistance. Now again, this is the monthly, and we know it's the same level on the weekly, the daily, etc. So that could shift around, but for the time being, like on a monthly kind of candle formation basis, that's really kind of not what you want to see, right? Because this is like the previous cycle level. It's where this kind of 3 months of selling or 15 consecutive red weeks, etc. That's where all of that kind of slowed down. You don't want to see that type of structure turn from resistance to resistance from support, right?
I agree. Just like you said, it's not really a breakdown, but it's a massive sign of weakness, right? Whenever you have a really good level that just gets disrespected like that, if it's not in a giant candle, I wouldn't necessarily say, okay, hey, this failed spectacularly or this is like a massive breakdown, but it's very, very clearly a sign of weakness because usually when you have good levels, bulls defend them. It's the same with bearish levels, right? They get defended for a while. In this case, we had like some people step in around 20k, but that didn't really last for too long, which has me a bit concerned. It's not necessarily the end of the world, but it's not a good sign.
And it also just feels like that bulls aren't asking for a lot. It's like, hey, can we at least flip 20, 21k from resistance to support, and then you can take the trade to the range high, or 23, 24, 25k. We haven't even had the 30k retest, which seemed like almost a given. When the crypto credit industry and everything just collapsed, you thought, hey, maybe we get our quote unquote bearish retest now. We haven't even had that luxury. And looking at 20k, I've got that same level now on the weekly time frame. This current price action, the market moved above previous week's high, and then is now back below resistance once again. So same old kind of just resistance pattern, to be honest. And yeah, signs of weakness at 20k. I still think the weekly cluster that we've been talking about at 20.5 to 21k is significant, but it hasn't even been able to reach that, to be honest. Maybe it does and pushes kind of above previous week's high into resistance, but in any case, the lowest bar I think you could reasonably set for showing signs of strength is flipping 20k from resistance to support, and it's kind of the second week in a row now failing to do that. Depending on how you count, it's been like a month pretty much of trading under that level and using it as resistance, and that's just kind of not very good in my opinion. As sometimes you just have to get a clear level and use it for bias, right? I think sometimes the market really is that simple. And for the time being, for both Bitcoin and as we'll cover for ETH as well, these previous cycles levels where a lot of this really aggressive selling stopped are kind of shifting their behavior from being, oh good, I'll buy kind of value below them as support, to being kind of pretty unfortunately robust levels of resistance.
Yeah, I think it's pretty well said in general. Like the level that we have at like 19.4, I think it is. And yeah, 19.4, 19.3. Like we have this cluster support, right? I think you have it too, from like 18.2K to 19.4 on the weekly time frame,
gotcha.
right? Those like two red candles that we had on the way up.
Two tiny red candles holding up the entire crypto ecosystem at this point.
Yeah, and it's terrifying, right, when you look at it that way, because it's not really the best support level. The only reason why it's been holding so well is because it's cycle support, right? And then seeing the cycle support level as in 20K turn into local resistance is just not the best look. Could obviously turn around, but I don't like it. And especially if we close this week inside that support cluster, I would actually argue that the support cluster has turned into mini range, and you have support at 18.2K at that point, and then resistance at 19.4, which is really, really not what you want to see.
A sad
obviously.
sentence, you know.
Yeah, that's just horrendous. And at that point, right, you have the bottom of the range tested a bunch of time. Momentum has been to the downside. I just don't really see a good reason to jump in, because as you said, you're not really asking for much on the bullish side of things. You have a lot better arguments above 20K. If you're trading back above 20K, you can make any argument in the world that this is bullish, just been accumulation. But right now, I don't really see any evidence of that. Any kind of red candle on the S&P leads to a red candle on Bitcoin. A green candle leads to a green one. The S&P doesn't have me too optimistic, let's say it that way. And I think you could see a decoupling at some point, but like we've discussed at length, you don't want to bet on it before it actually has shown at least one significant piece of the puzzle, which would be like a massive breakout of this correlation. The first move is going to be very telling, but we haven't had that yet. And every time people keep start talking about like a decoupling
you
of
people
sorts, it's like 0% or like 0.5% or like a percent move on Bitcoin, right? And that's a good first step, but it's not even like the first criteria for decoupling, right? You want to see like a Bitcoin 5% up candle while the S&P goes down 3%, and then you can start arguing, or maybe like a Bitcoin 10% up candle. Then you can start arguing that, okay, finally we've broken loose from the shackles of the traditional markets. Right now, I just don't see it yet. And given the recent price action, I mean, the weekly is not bullish to me. The monthly is not bullish to me. And then when we're gonna go to the daily time frame, I will not be much more inclined to believe that there's anything bullish on the TA side of things, right? I mean, you can make a bunch of other arguments, but the TA to me is pretty clearly bearish. My gut feeling is 20K is a really good level, especially on the monthly. So there's a good chance that we might actually go up from it. But TA wise, right, and just thinking about it in levels and, okay, is there any strength? I just don't see any. And when that's the case, I think it's time to just stop, let the market do its thing, and then decide later on what you want to do.
Stop it. Get some help. You know that meme.
Exactly.
I'm running out of fingers to count how many times this 19K daily range low has been tested. And yeah, that price action, the fact that it can't even really reach resistance, and all it does is basically spike a wick, spike the previous week's high and then sells off immediately. That's quite depressing.
Yes.
As far as the decoupling goes, I mean, yeah, we spoke about it at length, several episodes. Just watch pretty much any of them. I think another type of decoupling that would be interesting, apart from percentage views, would be a structural one. Like the S&P breaks and bearishly retests a high time frame resistance, while Bitcoin clearly reclaims a high time frame resistance. Just kind of structural divergence would also be very useful, and that would come hand in hand with a percentage type of move. But yeah, getting horny when S&P moves up 3% and Bitcoin's up 2.8%. it's just not good enough. You need a higher bar for these things, as we've said, and it's not there yet. The only other time frame we haven't really covered at length, as I said, is the daily, but I don't think there's really much home to write about there. It's just kind of range city, wick, spike city, and depending on how you count this range low, it's like 1, 2, 3 infinity tests, especially that little congestion we had from like the 19th to the 2nd of October, that 2 weeks, that level was just getting creamed basically.
Yep.
And the most it could produce was a bounce to spike previous week's high, and it looks like it's kind of on its way back again. And also, I just don't like this candle structure at all, to be honest with you. It's way too compressed and choppy, and there's no clear mini ranges, at least that are visible on the daily, that make me excited. Also, part of the reason the market's moving down, as we'll discuss, people are saying, oh, it's economic data this and S&P correlation that. Well, it's actually because I shorted yesterday and was in the trade for like 12 hours and nothing happened, and I closed it before it hit my target, and now it's hit my target. That's the real catalyst for the market moving lower. I was just sat in this short and it was just doing absolutely nothing, and so I closed it because I was like, oh, we've got news tomorrow. I don't want to be like, trading into the news where I don't have an edge, and that's when the market decided to move. The setup on itself was super brainless. It's that 4-hour highest close at 20.2k, and the market kind of overshot it and gave a retest, and I just sold that with invalidation at the high, just kind of the most bread and butter thing ever. And then I just waited. My target was pretty much where the market is right now, this sort of pre-breakout cluster type of thing, closer to, I think it was this structure here, 19.5, 19.6. So, on a risk-reward basis, that setup, selling at the level, invalidation more or less at the high, which stayed in, unfortunately. At least I could cope if it got taken out, but it didn't. And then with a target of 2.3R in this market on something like Bitcoin is, I'll take that any day of the week. But it ended up just kind of chopping around my entry, and, as we got closer to the overnight session and then the news today, I kind of cut it. So the real catalyst again is the market realized that I was no longer on board, and that's all it needs to move nowadays. But yeah, I think that speaks to the conditions in general. This 4-hour range we've been in is kind of hideous, and it's just kind of the most it can do is not even break out to test the high time frame levels of resistance. It kind of just spiked into the news, and then as soon as that came out, back down it goes. And whoever's bidding 19k for the 5th, 6th, 7th, etc. test, be my hero. I will always support people who are like, oh, I'm going to trade the range until it fails and milk it that way. I think that's mostly reasonable. It's just for me, from a higher time frame perspective, first test I love, second test I can do, third test, okay, maybe if the setup's good. But, the probability of a breakdown increases with each subsequent test, and the cost of being wrong also kind of increases, because then you're going to be wrong on the side of a very big impulse, most likely, if you are. And that means you have to size down, and just overall the expectancy of the setup isn't as great. So kind of as far as daily time frame goes, it seems like resistance is nearby and abundant. It's kind of in your face 20k, not even giving us the courtesy of a weekly 21.5 weekly cluster type of retest. And the support is battered and bruised for the time being. So I think that's kind of Bitcoin in a nutshell. I do think you could just take, the takeaway message could be just draw the previous cycle's level, which is 99, 20k, whatever. If that's acting more as resistance than more as support, it's not worth being particularly excited on a week-to-week basis, right?
Exactly. I totally agree with you. Nice. It's a boring, Bitcoin is a boring trade right now, and it's gonna be exciting again, but I don't want to bet on either direction.
Big week ahead.
Big week. I don't even know if it's gonna be this week. This could keep on going.
CPI is next week. Thing. That's the, we'll cover that in the news section. But as far as catalysts go, will get us moving at least intraday, if not a higher time frame expansion. We've got a busy calendar week next week, so yes. maybe that'll do it.
Maybe, that has been doing wonders, to be fair, in the last few weeks. Whenever we have gotten, or in the last few months even, whenever we have gotten news, traditional market news or CPI information or whatever, it's been moving. But if you look back to 2018, right, how the market turned to shit, basically, you had days where price moved in a $50 range. I could honestly see that happen again. So we're in a kind of area where you would expect bulls to buy, and we have a market structure where you expect bears to sell. And it feels like they're in equilibrium right now, and they're just waiting for like a match. And then the thing is, if this thing goes down, a lot of people are wrongfully, like they're just completely wrong in their expectations and wrongfully positioned. And then you're gonna get like a quick move to the downside. If we kind of get some catalyst that pushes this upwards, the same can be said for the upwards movement. The funny thing is, like, people don't even expect big price movements anymore to the upside,
Yeah, I know, it's true.
which is pretty bullish in itself, but it's not enough, right? Because honestly, like, I think if this breaks down, right, and at this point I'm kind of hoping for it because it would just make the trade so easy. If this breaks down, if you see any absorption, right, into 17 or 16k, doesn't really matter, right? 17, 16, 15, 14, it's going to be the bottom, in my opinion. And you're going to make a shitload of money buying that. The question is, are we actually going to get it or not? And the longer we spend in here and the longer we kind of just sell off into 20k, I think the more likely it is. And that's where real money is made, right? All of these kind of like low time frame trades or like these even like bigger swing trades are nothing in comparison to buying a cycle low. And I think that could very well be it. But I just need some indication that either we're going to wipe out the early bulls and I get to buy lower, or that we actually get some momentum. And then it's like both sides are really interesting. One, the momentum play above 21k, and two, the breakdown play below 18k. Both excellent setups, both excellent kind of trades, something to do. But yeah, right now, maybe we go sideways for another 8 weeks, and that would obviously suck.
Equilibrium sucks is the takeaway message there. I agree. It's been funny watching Twitter commentary. It's like these are full-time traders, and I understand you have to adapt to conditions, but we went from just like super cycle, on-chain, yada yada, whatever, to like, guys, I think if it goes above 20.8, it could go to 21.2, you know, big week, that type of stuff. And it's like, oh my god, we're day trading like the low 20s is the range we have, you know? It's like you catch 19.8 to 20.1, you're like, oh, I'm eating good today, you know? It's a very depressing state of affairs as far as volatility is concerned. Let's look at ETH very quickly as well. I think you could also just do a pretty basic summary version that you have previous cycles level, 1400, 1420-ish on ETH acting as intra-week resistance, or at least the market is below it. And as long as that's the case, you can just be like, fuck this. And if it gets above it, you could be like, oh, question mark. And that's kind of the trade setup. I think for me, if you look on the daily time frame, that previous cycle's 1400 has been such a good level, right? It gave like the 3 perfect bounces before the breakdown, and at the moment it's been consolidating what I think are the 2 key levels between that 1400 previous cycle high and that 1200 pre-range breakout, you know, when the merge stuff really started, etc., at one point, you know, 1230, 1240, etc. So again, volatility compression, you're moving, you know, between 1240 and 1400. That's not a massive range by any means. And even within that, if you look at the most recent price action, hasn't even had the courtesy to tag either side. It's been even tighter between like 1.2 and 1.3, or just stuck at 1.3 basically, which is sort of depressing. But I think the back of the napkin kind of brainless trade is if you want to see strength / momentum continuation, whatever, it's not asking for a lot, or at least it shouldn't be, to reclaim or trade above previous cycles high. And then we can have a conversation that was the wick, that was absorption. You could at least day trade it to some of these higher targets, right? The 1500 cluster comes to mind as your first trouble area on the daily time frame. I hate this level. I mean, it's good, but I'm just so tired of the market trading it. It's probably still worth paying attention to. And then on the weekly time frame, your higher time frame kind of resistance becomes what, 1800, 1700, that kind of cluster there, or at least the, you know, where the last lower high took place, which is at around 1800. As far as the weekly goes, I know you've got some structure at like 1300 and all that type of stuff. I think it's fine as support, but I think if you look on the weekly, that 1400 resistance has been so clean, right? Like the touch on the most recent weekly bounce, that 22nd of August candle, was right at that previous cycle's level. And then if you look to the left, kind of last year, that was also the perfect retest before bull run continuation. It just seems to me that sometimes the market just gives you just a line in the sand more than anything to focus on, and everything else comes second. And for
Yes.
me, it's 1400 is about as clear as you can ask a market to make the level. And I think most of your trading decisions and biases should be predicated on that, be it on the daily or on the weekly, because every time frame, seems to work really well for 1400. What do you think of ETH USD?
Yeah, when I'm looking at the ETHUSD weekly chart, I look to the left, like all the way to the cycle high, basically the highest close. And then that's like on the 8th of January 2018. That's kind of like the high of like the area of support that I've marked out. And then the low of that area is the high of the 22nd of January, that like green candle after the breakdown. And that area I've clustered out basically. So it's from 1360 to 1240. And that's the exact area that we've just kind of been trading in the last 3 weeks. And every time we go to the range high, essentially, we get rejected. Every time we go to the range low, it kind of gets brought up a little. And this is honestly like the area of support that you need to see hold, because it's the only area where you can actually make a higher low, right? If you break that, you get pretty much to equal lows. You don't want to see that, because then you wouldn't expect this market to actually start trending in the opposite direction. You just expect chop and sideways movement. So this is kind of like the last line of defense for the bulls. And I do agree with you that the cycle high of 2018, as in like the highest it went in 2018, which is 1420 something, is and has been the line in the sand, right? This is where the exact price level where we've been trading around. But yeah, for me, like the candle close, I'm just looking at them and I'm like, okay, we need to move away from that. If you want to be bullish, you have to have a close above 1350 on the weekly time frame. At least, but even that isn't enough for me, because like you said, I think 1420 is too clean a level. So you want to see us trade above 1420 and close above 1350
Do
on
both,
weekly.
right?
Pretty much do both on the weekly time frame for ETHUSD. And honestly, like the fact that we're spending so much time in this area where you'd expect a higher low to form makes me a little bit cautious, because that we shouldn't be, right? This is the area where everyone that kind of didn't get to buy during the first rally should be piling in, but there's no one piling in, right? It's just going sideways. So there's no real trade for me there either. It's at support for me, but this is the same for Bitcoin, right? Both are at support for me, but there's zero signs of strength. You can go through any kind of metric of, okay, how do I visualize strength in a market? And I don't think you're going to find anything really anywhere, at least not the metrics that I use. I just see, like, if anything, weakness or just chop. And that's not the market that I want to be trading for both Bitcoin and ETH, especially given, and this is something we're going to talk about, the S&P and the S&P monthly close that we've had.
Trying to stay away from it.
There's no staying away from it. Even if you just look at the crypto charts, you're going to see the S&P chart hidden underneath, which is really, really sad. But yeah, I have troubles with the ETHUSD chart as well. I think it looks much better than Bitcoin, just from a structure standpoint, but it's still not good enough, not even close to good enough for me to just jump in there. I've had my trade on ETH. I've had trades on Bitcoin. I think now the market actually has to show us what it wants to do. And until that happens, it's just a waiting game.
The way you've constructed your weekly kind of 13-ish cluster is in the most fuddy way possible, because all the weekly and daily closes just look like pure rejection if you kind of draw it the way you have. But I agree with you. Like, it's just like we wrote about it in Technical Roundup. This whole ETH area is so congested, because 1200 is a good daily level, 1300 is a good like weekly cluster level, 1400 is a really important like previous cycle all-time high level. It's just a shit sandwich there, you know. What are you gonna do? Buy 1250 and sell 1270 and lose on fees? You know, like there aren't very many good options. I agree with you. Like the clearest just seems to be the momentum continuation through 1400, because at least you've overcome most things at that point. But you know, again, retrading the same range for the nth week in a row just isn't terribly appealing. 1200 to 1400 seems to be a higher time frame line in the sand. 1300 is like support, but you know, you wouldn't want to sell below it because you've got 1200 below, and you wouldn't want to buy above it because you've got 1400 above. You know, it's like the amount of good decisions you can make are pretty constrained. ETH BTC, is that interesting at all to you? It hasn't
Yes.
completely disappeared since the merge, which I guess is like in itself a positive development, because I'd expect it to, you could make a case that it should go down only after a kind of a very intense sell the news event like that. The FUD that I can generate for this is if you take the weekly range and do it wick to wick, so kind of 0.08 to 0.05 or whatever, the weekly mid range we just closed barely, well, we closed below it last week, and that seems to be like an area of resistance now. Now, obviously, that's not super compelling, so I think if you adjust the anchors you're using for that level slightly, I can make it look like perfect support if I look at the candle bodies, right? So it's a bit discretionary there. But in any case, it hasn't like fallen off the face of the earth, given it was such a perfect setup, i.e. sell the news into the range high, failed breakout back into the range, and it seems to be like slowing down or holding at the range midpoint. Do you think EBTC is like even relevant now that the merge is over and we're all SPX traders?
I think so, yeah. And you're going to see early ETH strength on ETH-BTC, basically. That's what the chart is for. Oftentimes, you don't see it on the ETH-USD pair because like Bitcoin's dumping and you're like, okay, everything looks like shit because the USD prices are going down and everything. But you can see accumulation on these Bitcoin pairs much, much easier than you can see them on the USD pairs, because you see relative strength. And that's really, at least for my trading, that's one of the most important things to see, right? You see that there's a bunch of people that really want to own something for one reason or the other. And then you have the narrative and you add those two things together and you almost always have a trade, right? Someone big is buying and you have a good narrative for that. I mean, that's just a brain-free trade. It's one of my favorite things to do. And that's been accurate for ETH for quite a while. Now, like you said, we've broken down. But I totally agree with you there, but it's slowing down, right? Like the breakdown, I would have expected it to be stronger. And I'm kind of looking at the 7th of March, 2022, that kind of low before another up move before where it completely failed. It failed even failed the entire range and then came back up. That kind of low is acting as support right now. So that's like low time frame. It's like not really low time frame because it's weekly, but in general, like just as like a microstructure thing, it's interesting. It's at least holding. And I think in general, ETH is going to be most likely over the next few years more interesting than Bitcoin is going to be, just looking at the chart. But I think it can easily go sideways for another year, 2 or 3 against Bitcoin. And that's obviously not a trade that you want to be stuck in at that point. So for me, I'm just going to ignore ETH BTC for a while. I think it's one of the most like important charts for altcoin trading, but we've had a massive narrative. We've had everything play out for ETH, so just like it's good. And micro structure is also okay on it, but it's not enough to it's not in the position to pull everything out like it has before, right? Like we've had dips before that basically ETH buying has stopped because a bunch of people buy ETH. And then ETH goes up and people pile back into crypto as a whole, and then we go back up. That's been like a story for a lot of these kind of dips that we've had on the way up as on the way down. Right now, the narrative as in the ETH merge has played out, and the TA just looks like sideways. It's not too interesting. Like it's not something that I'm staring at day and night. It's just something that I check on every now and then to kind of see how strong altcoin should be behaving. And I'm actually surprised by the strength there. So it's surprising me in a positive way, and microstructure is okay, but there's nothing to write home about yet.
It feels like it's hit peak relevance as far for the short to medium term, at least after the merge. I agree the relative strength is interesting, and in general it's an interesting chart. But yeah, it feels like kind of what we talked about a few weeks ago, right? Like you need the market to just churn and digest and chill out after such a concentrated trade like the ETH merge. So it's unsurprising that volumes kind of floated away a little bit and distributed more evenly. So that's Bitcoin and ETH. I mean, let's go straight to the elephant in the room. We'll skip over altcoins and talk about the S&P. Because oh man, why am I not trading this? Like, look at the reaction to, it's just depressing. Anyway, so we wrote in Technical Roundup, trletter.com, our free weekly newsletter, that if crypto is going to have a rough time, or if anything is going to rain on the proverbial parade, it'll be the S&P 500, right?
Yep.
And the reason for that was, the basic premise is this market is trending down. It's trending down very technically, and the rally that was taking place earlier in the month was an underside retest of the cluster slash resistance or monthly support turn resistance at 37.10 to 37.60. And that really seems to be materializing now. Like, I know there's over 3 weeks left on this monthly, but I mean, it's acting as resistance from the available evidence, right? Across all time frames. One thing you can also do that's quite interesting, if you take that monthly cluster, you know, like the red candle specifically, and just map out its open and its close to get like a midpoint as well, that level has been pretty useful on lower time frames as a kind of pivot or just as extra confluence for like short-term trading. But in any case, like the picture remains the same. Even if you, for example, delete the monthly cluster and look at it on the weekly, like the most kind of brain dead bread and butter TA, you take the weekly close of the 13th of June and look at the current weekly, that's just like a break and retest of the range, right?
Yes.
You can even drag it further to the 25th of January weekly candle. That's just like a break and retest. Now, again, there's plenty of time in the month to shift things around, but I don't know, I'm skeptical, right? And I'm skeptical for the reasons we outlined in the beginning. It's been very trending, whatever, but it's also been very technical. So me saying, oh, it'll reclaim, it's a trap and all that type of stuff, there just hasn't been a lot of that type of behavior in this market, right? Maybe there will be.
Zero,
maybe
yeah.
this, yeah, well, exactly. It's been as clean as it gets, right? Now maybe there will be, maybe this is the inflection point, maybe this is the deviation or the trap, but you know, and people are trolling me in the comments for this, and I do appreciate it because it's funny. It's like, take a shot every time Cred says at face value. But like at face value, it is resistance turned, the support turned to resistance, right? And there isn't like a pattern of behavior where those kind of setups have turned into deviations or turned into reclaims. Kind of have to take it for what it is. Now, it could get rescued on the weekly and the monthly, etc., but the onus is on the bulls to prove that. And they're not proving shit at the moment.
This is the worst looking chart I've ever seen. Like for like a traditional market, this is horrendous. I mean, it's as clear as it gets. It's support holds one test, then it tests resistance, the support fails. That support turns into the next resistance. So like it basically is back and forth, back and forth, back and forth. But every time it retests the support twice and turns on the second test, it breaks the support and kind of just establishes that support as the new ceiling. And that's been going on for months now, right? You can see it from the highest close to the next one, to the next, like it's just walking down. And like you said, how does it make any sense to expect this to be a trap every time? Because you can play this like 20, 30, 40 times, this game of, okay, breakdown, retest, breakdown, retest. And if you kind of expect it to be a trap every time, you're just going to lose all your money. Just wait for it to be a trap and then execute, right? Because they're still going to, like these traditional markets, they move slowly. You have like an actual trap setup, as in like we break support, trade below it, and then we come back above it. And then you still have like a month or two of like good price action to follow, right? It's not like you're in any rush, and you can take the advantage of that in crypto. But unless that happens, why assume anything that isn't there? Just doesn't make any sense.
Yeah, it's like the Russian expression of seeing a black cat in a dark room, you know? Thing is, with trap setups, I feel like I've ranted about this before, but it just bears reiterating. You always need to consider the context. So the whole reclaim failed breakdown setup, it's a bullish pattern, right? It's like a bear trap. So under what circumstances does it make the most sense to look for that type of behavior? So if the market's trending up and you see a breakdown, I think it's worth being skeptical, right? Oh, okay, this might be a trap because it's counter trend. If the market's ranging and you see a breakdown, you might say, oh, it looks like participants are doing businesses through the extreme. That's generally a bad area to open like fresh positioning or whatever, right? Or expecting the range to break when the range has been intact. That's worth taking seriously. But if it's a breakdown in tandem with the trend, then out of all the available setups, that's the one with the lowest possibility that it's going to be a trap, right? Like if it's counter trend, maybe a trap. If it's in a range, maybe a trap. If it's just in line with the trend, far lower probability or far less attractive setup than those other two. Because it's probably just, in a trend, delta just price just follows delta, right? Sellers sell, market goes down, sellers sell, market goes down. There's no one really willing to soak these things up. So I think when people talk about reclaims and failed breakdowns, some context is required. Where do you look for them? You look for failed breakdowns in an uptrend because you expect people to sell at bad prices or for there to be a bid. you look for failed breakdowns in range bound environments because people doing business through the extremes are expecting the range to break, generally lose money because the range is a range until it isn't. But if you're like fading every breakdown when the trend is also down, then that's the highest likelihood that you get caught with your pants down. That's the least attractive setup out of all of them. I hope that's some bear FUD bottom talk and it does turn into a trap, because I think that would be an awesome setup, like a really, really good setup to play to the upside. But that's for the market to prove, not for me to speculate on, right?
Yes.
That does beg the question, though. You've been talking about how kind of systematic it's been, going from support, resistance, etc. Where is the next high time frame support for you? And I want to ask this as a twofold question. Like, where is that support kind of purely technically speaking? And then what's your kind of gut feeling as to if this flips, where's the market going to go?
So my gut feeling is if this turns into resistance, right, and it looks like it is, this current level that we're trading at, like 3.7K, my gut feeling is we're gonna eventually end up in the middle of like this 2018 range that we've had. Like 2018 started as in like with a low, let me actually draw it in myself. So like with like at 2.5K to, and this is all on the monthly, there's this kind of range between 2.5K and 3.2K, as in like the pullback that we had on the 3rd of December, and then all the way up to like the high before COVID, right? So like all the way up to January of 2020. And that range in the middle of it, I think we're going to end up somewhere like in between like maybe 2.9K and 2.7K.
Yeah, the 2800 kind of point of control looking thing.
Yes, exactly. Like we've
Dude, that's
traded
bad.
Yeah, that's really bad.
That's really bad. The amount of wealth they raised and all this type of stuff is, yeah. And also, I don't want to ask. I don't even want to speculate what price Bitcoin is if the S&P falls another. What is that? 10,000%?
Yeah,
20%.
I mean, it's at this point it's like 20%. We've already done 20%. I think that seems realistic somewhat. It seems really bad, honestly, and I don't think we need to go there in a straight line. But that's kind of where I feel like we should be like ending up. Kind of makes sense to me to at least retest the COVID highs, as in like before COVID started, the highs of the market, because like everything after COVID started is kind of like bullshit price action, right? And it's oftentimes when you get this kind of bullshit price action that you kind of just retest where you were before.
And 2 years of your life was a deviation, bruv. You know, like it wasn't real, but bro, wake up.
I mean, it wasn't real in real life, right? People were stuck at home and like stuck in their metaverse garbage. And now the markets have kind of finally caught on and are like, oh shit, the price action that we had since then hasn't been real either. But yeah, I think that kind of makes sense. Next support is obviously that like these two red monthly candles that we had on like October of 2020. That is an area of support, but I'm just not willing to do much given the current price structure, right? Because you can kind of see that it's not really like the sell-offs have not really been slowing down. Like the candles haven't been getting less aggressive. If anything, it feels like they've been getting more aggressive. So I think there could be like one last panic event in store before this thing kind of has like a big bounce. That's why I like to target 2.9 or 3K. I think that would bring panic back into the market and would make for interesting buying opportunities. But really, for me, I want to see like either the S&P trapping the bears, as in like close back above a resistance at some point, or in general invalidate this like very clearly kind of like stair-stepping down pattern of bearishness. Like I want to see some strength, and this is the same argument that I'm making for Bitcoin and for ETH. I want to see something, right? I want to see that someone out there is willing to buy this shit before it goes to zero. And before that happens, you're not going to see me jump in, especially given that it's been pretty clear, right? It's been pretty clear on the way down, and this is another breakdown as we've had before. And I'm not gonna be the hero in this instance.
This is the type of downtrend that like hindsight LARP YouTube TA educational channels like at CryptoCred use to like demonstrate what a trend looks like, you know? It's like a trend, there's lower highs and lower lows where every level of support when broken turns to resistance, which never fucking happens. Like it never works that way, except it's happening now right in front of us, you know? But I agree with you, like the market's currently retesting resistance from the underside. If you want to be a bull, you want to see that bearish retest fail, which is bullish, or the market hits support where you can justify buying. But buying the bearish retest is, not top of my list as far as setups go. It does beg the question, though. If we start hitting your targets like 3K, closer to the 3,000 handle trading in the S&P, what does Bitcoin look like at that point? Because it's either still at like 18K, and it's like the most insane relative strength ever, and it goes straight to 40 when equities bounce, or it's at like new lows, apocalypse in this, crypto industry breaking type of levels, right? I don't think there's like an alternative.
I think it'd be at like 17K-ish. I honestly think that's where we're going to see the massive relative strength come in, because I think Bitcoin has dropped a lot, obviously. Just look at the prices, bad prices. But I think at certain price levels, the crypto wealth is too big for it to drop more. Especially like at some point, the correlation just has to break, I think. Like the prices get too low for them to maintain. Like, I mean, you have to force the correlation, right? And this has been happening. You have to kind of sell Bitcoin, right? But it gets more and more risky the lower the prices. And at some point, someone can just step in and just kind of ruin all your profits that you've made from the top by kind of correlating this thing to the S&P. And then it gets more and more risky. And I think at that point, like if the S&P kind of has another move to the downside, especially if it's an aggressive one, we would start seeing relative strength. I still think we'd see panic selling. That's why I'm like a little bit excited about it, because I think there would be like great opportunities. But I think at that point we'd see relative strength. Obviously, if we don't, I mean, if it just continues what it's been doing, which is basically the S&P goes down 10% and crypto goes down 50%, then we're kind of fucked.
And every fund gets liquidated. And
but I don't think that's going to happen, honestly. I think the lowest I could see as a wick, honestly, is 14K if we actually go to the downside. And I still don't want to guarantee that. I still think 20K is a level that makes a lot of sense to buy. It's going to be in hindsight, it's going to be like, people are going to be like, why the fuck did I not buy 20K? Like the bottom, you're not always going to be buying, right? You're not going to be mad about missing the bottom, because oftentimes it's just like, one, it's impossible to buy, or it's just way too scary. But these kind of obvious levels, like 20K, they're going to be obvious in hindsight, and you're going to have had like a couple months to buy it, and then it's going to trade above it, and you're going to be like, okay, what the fuck? It's still my belief. I'm greedy, and I want to get lower prices. I want to buy Bitcoin off of people's hands that get liquidated because they've been bullish too early, or because they've been bullish into weakness, right? And I hope I get it. If I don't, I'm going to buy into strength. I think this is a level where you want to be looking out for buying opportunities. But like I said, with the S&P looking like it does, I think there could be one more chance to basically buy really low on both of those things, right? For the S&P and for Bitcoin. And I'm personally kind of hoping that is going to happen. But to answer your question, 17, 16K, maybe 15 if all goes to shit. I don't think it's going to go much lower than that, even if the S&P crashes another 10, 20%.
Yeah, I hope you're right. Because obviously the bear case version of that is we had a huge impulse down, the market slowed down at 20K. That's just a new multi-month range. And then we break down from that. That's a breakdown from multi-month range, and you expect a move big enough to reflect that fact, right?
Yes.
That's sort of... Because look, if the market goes to like what you're saying, sort of 17, 15, maybe wick, etc., and then gets absorbed, that's almost like a failed breakdown, right? It's just a failed breakdown with like very illiquid conditions and a deep wick, whatever. But like structurally speaking, I'm drawing it on the weekly time frame now, this move that takes us to 17, 16, 15, whatever, and then that's where your snapback comes from on the weekly. It won't look like it won't feel like it, but anything that doesn't just keep trending lower and print consecutive weekly candles isn't a range breakout and expansion. That's more on the failed breakdown side of the spectrum, right?
Yes. That's pretty much exactly my argument. I think like the range that we currently have with 20K as the low, we could easily get a failed breakdown. I'm not expecting much more. Like a failed breakdown with liquidation cascade, I think could take us to 14K as a wick. But anything beyond that, I'd be very surprised. And I think we would reclaim this 20K range pretty quickly afterwards. That's kind of my gut feeling. Now, TA-wise, all I'm seeing is weakness. So I'm going to have to wait and see how we react around those levels. But I don't know. I have this gut feeling that if we're gonna get lower prices, it's gonna snap back pretty much immediately.
That'd be a good sign. That's what you want to see, right?
Yes. Yeah. And I think that's basically the one thing that you wanna buy. But I could be completely wrong. But that's what I'm gonna do. I'm almost 100% certain that I'm gonna be bidding 14, 15, 16, 17K in that area, depending on how the market goes into it. And like I said, I'm not even sure if I'm gonna get that. I think that's greedy. So I see people like telling their followers on Twitter, okay, a 10K is coming, sub 10K, whatever. I think that's way overblown. And the funny thing is, most of those people were people that were bullish at 60, 50, 40K. So I kind of find it hilarious that they now turned so fucking bearish.
I mean, it's just momentum monkeys, right? That's what
Yes.
that behavior is. Price goes up, their targets go up. Price goes down, their targets go down. Eventually, they catch like a decent part of a trend, and build huge credibility and audience as a result. But ultimately, it's just chasing the market. Fundamentally, that's all that type of trading is. Now, in some environments, that's fine. But yeah, generally speaking, if you find yourself, if the market adjusts your targets for you constantly, just based on your feelings and FOMO, you're probably doing something wrong. There's also like an outlier scenario, Don, where both of us are wrong and the market just breaks lower and it goes to like whatever kind of doomer new lows range, temporary or not, 17 to, like through the low, let's say like 14 round number, right?
Yeah.
And then it just, as the S&P spends a shit ton of time at the mid-range, we could be stuck for a while as well. And then that's when we enter purgatory. It's like, oh, 10K is next, or oh, this is the bottom, while we're sort of in no man's land. Classic type of apocalypse scenario. But yeah, I think you're right. Like at face value on the weekly time frame, it's like we're at the bottom of the range. No one's buying it for the time being. If it breaks down, it gets to really relatively attractive prices. And I think those are worth punting. And you either get that as like a really good investment price, or maybe as a mean reversion type of thing. Even if it's like a 14 to 20K, even retest itself is like a very decent trade, if that happens. But I think the overall message that's useful is that if this weekly range breaks down, you should be open-minded towards failed breakdown setups and skeptical of chasing it much, much lower. You should be having an eye to position bullishly, or at least like be open-minded on the bullish side, rather than being like, oh, well, this is it, and this is the big move that takes the 6K,
Yes.
Yeah, cool. Another FUD chart I've got, just to stay on brand. Yeah, if you look at the NASDAQ monthly, that double candle cluster that we had in Technical Roundup? Now, I've done the same thing here, where I've got the highest close, the lowest close, and it automatically gave me a midpoint, which comes out at 11.6. And that was like the pico-perfect retest on the daily time frame before the move back to the range low. Now, maybe it generates a bounce at the range low and stays range bound between the range low and the range midpoint. That would be like decent. But if it's anything like the S&P, again, it would start to look like a textbook bearish retest, right? Monthly closes below, albeit unconvincingly. You get an early month push, not just into the underside of the cluster where it closed, but it pushes slightly higher to the midpoint of the range, and then closes/finds resistance back at the lower boundary. That tends to be like one of the most bearish kind of range trading patterns, right? You get a range breakdown, the market pushes up for a bearish retest, does a bit of a squeeze and gets to the mid-range, and then loses the range low again, right?
Yes.
So I'm going to like draw that very quickly on this squiggle. So basically you get like a range low breakdown, so you have a bearish bias, it pushes into the range low, early sellers get smoked, and it pushes up to the mid, and then rolls over from there and through the range low again, and that ends up being your top. That's like a very ugly and very bearish pattern. If that happens, again, 11.1 is your pivot for intra-week or even week-to-week resistance. And as far as NASDAQ support, I didn't even want to talk about it, to be honest.
I mean, it's 9K. And that's the funny thing, right? It's 20%. It's exactly
like
20%.
the S&P, right?
Like the S&P. Like the exact level that I'm targeting on the S&P would be the perfect support on the NASDAQ.
I mean, you have to take a punt there,
I mean,
you want to show your grandchildren these monthly charts and be like, I was there during the great tightening and war and commodity crisis and in stagflation and central bank crisis policy and all this other stuff of the early 2020s, and you look at my limit order fills and stuff. I was trading those, the market went to zero, but look, I was trading these really good levels, and it was a once in a generation type of opportunity. So yeah, I think you have to nibble. You just have to nibble, and then
not even
if you
I
buy,
think this is where you buy a shitload.
oh yeah,
honestly.
yeah. I mean, you have to trade these levels one way or another, right? They're just it's a privilege to be here. It's the Titanic violin scene. Like, what else are you gonna do? And it also, what you need to do is actually buy sub 9,000. So then when it goes over 9,000, we can bring back the Dragon Ball Z memes from the bear market and say it's over 9,000 and you'll be in profit. Like, that's a really good trade idea.
Let's go. I like it.
Yeah.
That's a good meme.
But yeah, as far as monthly or high time frame closes go, I think as far as indices are concerned, it's still bear FUD, right? And the bear FUD are the high time frame retests, which at the moment seem to be acting more as resistance than as support. And so you want that behavior to change, or at the very least to start changing on the weekly time frame, right? That could be some cause for optimism. Like if the monthly looks like a bearish retest, but if the weekly tries to roll over now and then gets absorbed and starts pushing up again next week, you could be like, maybe they're saving the monthly, and we're seeing early evidence of that on the weekly. That could be decent. But again, that's just projecting and extrapolating and talking about things that aren't there yet. I'm not going to say that face value thing, but I think everyone knows the implication there. Do you have any altcoins that you care about? We talked about Link a little bit in the newsletter.
Yes.
I don't think that triggered strictly, or it was at resistance anyway.
No, it wasn't resistance.
Solana, you were posting some FUD, I saw on Twitter about the weekly chart and everything. What's kind of on your altcoin radar? I mean, BNB we'll talk about with some bridge hack and everything, but what you got?
So, I mean, I've been shilling XRP extensively in the last few weeks, right? And if you look at that chart real quick, it doesn't even seem to give a shit about it.
It doesn't know what's going on.
I mean, this shit is just going up, straight up only, right? Which is pretty cool. I mean, I sold I don't have any altcoin positions, right? This is all just me laughing about anything. I don't have a stake in any of this.
He's just like me, for real.
The thing is, XRP, I see myself be angry at myself for selling it. I sold it pretty much exactly where it is right now, so I could rebuy. But I'm just not comfortable enough. I feel like if we get a breakdown, I'm going to get better prices, but I will be buying back my XRP. If I get it, right? If it goes to 1, I'm not going to chase it, even though I think it could go higher. But if I get a breakdown on Bitcoin, I'm definitely the one coin that I want to be buying is XRP, as stupid as that sounds.
What's your level for that? Because there's the range high that it broke out and retested from is about 39 to 40 cents or thereabouts as far as support. Is that kind of, roughly the 40-cent handle? Is that sufficient as far as pullbacks go? Which is close to the previous low.
Yeah, I'm gonna say a little bit lower than originally I'm planning, because people are gonna fucking front run me again, and I hate that. But yeah,
some sort of throwback, right? Yeah,
38 cents. If we get a wipeout, or even honestly, if we get a complete meltdown on everything, Bitcoin breaks the 18-19K support, I could see stuff go in altcoin land go down 50% again, right? So in a daily candle, not necessarily 50% in a daily candle, but a huge wick, 20-30%, after already having trended down a little. So I would try to buy anything below 0.38, as low as I can get it. That's kind of my XRP thing. Honestly, good chance I don't get it. I feel like I'm just looking at this chart. This wants to go up. So good chance I'm just going to sit there holding nothing, holding empty air and being very angry at myself. But I'm supposed, the only reason why I took the trade in the first place is because S&P was at support. And that was kind of my invalidation. So I had to close it, right? In these kind of market conditions, if you don't follow at least the key rules that you have, you're just going to lose your shirt. So for me, it just kind of wasn't really a question. But I would love to be back in that position. And I will be back in that position the moment something bad happens. So 0.38 on XRP, really interesting. I still think they're going to win the case. So any kind of bottom in crypto will, I think, move XRP hard. And on the Bitcoin pair just looks really good as well. So it's kind of it's one of the best looking charts in crypto right now.
Any market-wide weakness you're looking for, wicks in XRP to get long?
Yes. Yes.
Yeah, that BTC chart is naughty as well, isn't it?
It's insane, yeah. With regards to Link, right, we wrote about it. That one I want to see strength in. It's a really interesting setup above $8. I think if we get this wipeout that I've been talking about, it's obviously not going to show this strength right now, but at some point it will. And it's been outperforming for a while now on the Bitcoin pair. So it's an interesting chart for me to follow. It's not necessarily something that I'm going to rush into buying after wipeout, but it's one of the ones that I'm looking at closest. Because if I see any kind of strength into like, I mean, if you just think back, right? Back in 2018, 19, 20, we had Link outperform the entire bear market, right? Link was going up, and I think that's a good narrative to follow. And it's been outperforming this, like in the last few weeks, it's starting to. So I just want to be looking at it closely because I think Link could have like another run.
Does that mean it underperforms the next bull market again? It's just like
Yes.
forever cursed. It
Yes,
does well
yes.
every bear market and every bull market. It's like, nah.
That's just kind of like, I mean, I'm just looking for that like low, like a little bit of that narrative to play out, and then you get like a 50% move or something. But like I said, I need strength there.
Yeah.
Pretty
clear level at 8 as well, right?
Yeah, and it's the same with Bitcoin. The Bitcoin pair looks kind of cool. The $8 level is really clean, so that's kind of what I'm looking for there. I'm looking at like Solana, for example. Like if we get a market wipeout, right, on Bitcoin, for the people that have been following for at least a few weeks, I bought Solana when the market wiped like completely below 20K. And I bought Solana at like 29.30-ish, like that level, the range low on the Sol USD pair. And the reason why I bought Solana instead of a lot of other things is because I know that there's a bunch of bigger guys interested in Solana. So if they see a bottom forming in crypto as a whole, I think they're going to jump into something like Solana first. So I want to be buying Solana if we wipe out. And then I'm going to sell that relatively quickly and roll it into something else. And that something else could be anything from BNB, like if there's a wick there, from Cake, from like Link, from XRP, anything really. But I think Solana is probably going to move first. And that's kind of like what I'm looking for there. But I wouldn't want to be buying this range low retest again. Like I bought the range low one time, and now we're back there and we're kind of hugging it, and I don't really want to buy it. So.
Don's like, fool me once.
Yeah, fool me once in a good way.
Yeah.
Because I bought it and I got to sell it. I mean, all credits to you on that sell. Because
yeah, I'm still waiting for the USD transfer for my asset management. But, you know, it's fine. We can talk about that off air. I've actually got a nice looking range for Solana. If you go on the weekly and get the highest close, like that highest up close candle at like 47, and then the lowest close of that mega nuke candle at 24.5, you get a really nice mid range at about 35 to 36 on the weekly time frame. And you can just say that you can tell right now that it's completely in no man's land, right? I mean, it's at support relative to the June 22nd range low, if you want to pull it that way. But within the larger range, I think your key levels are 47 range high, 36 range midpoint, 24, 25 range low, and it's currently below the midpoint, which generally suggests range low retest next. I think if you get that sort of the trading closer to the 20s handle on the market-wide meltdown, especially if you get a spike past where the most recent low took place, that might be a decent setup to hunt for absorption or a failed breakdown setup, etc. And even swinging it from range low to range high, like 24 to 35 or even 24 to 47, that's like a very orthodox kind of setup, right? You buy support, sell at the midpoint, sell at resistance. That's like a 2x if you take it range to range, you know, from 24 to 47 basically. That's something kind of not worth ignoring. And then, you know, your kind of copium target that you were puffing on when the market looked like a bit stronger was the basically filling in a lot of the Kyle Samani gap, which is the down only from basically like the hundreds down to 20, which sounds hilarious to say. But you know the cluster I'm referring to, right? The lowest close at like 80, basically. So there's a world in which, I think you talked about this a lot actually, there's like some sort of momentum trade that you can get. I think you had a different setup, like 35 plus, right? On the weekly or something like that, which also coincidentally lines up with that range midpoint, right? So if you get like range midpoint reclaim, you likely get at least 47. And then I think your argument was we've already been there and tested that. And if you get a range high reclaim, then you can fill in a lot of that inefficient selling into 80. And that's like a really good position at that point, you know, especially if it's one that compounds. And then, the max hopium scenario is that you get a breakdown into the range low, you soak it up there at 24, and then you end up swinging it to 48 and then back to 80. But this is like fantasy land type of setup, so we'd beg for that type of altcoin volatility. I think structurally it's very possible, but it seems quite far away at the moment. Also, complete side note, Don, I'll never forget shilling the bearish retest on Solana in Technical Roundup when it retested 135. Do you remember that?
Yes,
we were like, this is the best level on the chart ever. It looks like total dog shit. Like, this is, complete crap. And then I don't think either of us were expecting the weeks that followed.
Yes.
But
we basically went to zero, right?
Went to zero. But we did get a couple of emails on the and sort of comments on the YouTube channel being like, oh, I sold all my Solana because of you at like 135. It's like, I wish I did that. Fuck, as far as taking a short or whatever. So that was that was a very much a good case, a rewarding case of just following the best levels on the chart, So I agree. I think Solana's probably going to be around next cycle in a non-trivial capacity. It seems like an active enough dev community and enough money and enough people still give a shit in a different type of layer one. So, I'm here for it. It's definitely one I want to pick up if I get the appropriate setup. Should we do some new stuff? Do you have anything to add? Do you have any other alts to chill, or should we rattle through?
I think that's like enough, because the moment I talk about an altcoin, like I said, like the weird thing is, like, I'm weirdly bullish on a lot of things, but in a way that I think we're gonna have a down move first. So I don't want to shill anything too early, but it's gonna be like if we get a down move, you want to watch a lot of coins, because I think
is Atom still on my
Atom
list?
is an interesting one. Yeah, I like Atom in the sense that, like, I want to see it. I want to see everything move down. I want to see everything move down, and then you can buy it comfortably.
I'm so bullish. I want everything to move down.
Yeah, I mean, imagine that. You get to buy cheaper. and that's kind of my gut feeling. Like, I get stuff cheaper. And if the good thing is, right, like, for example, Solana going to 15, like 15 to 30 is a 2x, right?
Yes.
And it could go from 15 to 80, and it wouldn't still like be like completely crazy, right? That's like a crazy move in percentage terms, but like Solana at 80, I mean, that's still quite a bit away from all-time high, and that's still like somewhat reasonable. So like for me, the lower it goes, the bigger the multiplier is going to be at the end of the day. It's just a question of how greedy can you be. And with altcoins, the answer is almost always you should be as greedy as you can be, because the thing is they can and will go to zero like over time eventually. So you want to be greedy, and then you want to hit it and pray to God that they're not going to go to zero while you're holding them, basically. But yeah, so like I think the coins we talked about, like I said, XRP, Solana, Atom, Cake, Link, BNB, even though like there's some news there, but I mean, it's just in general like interesting coins to be trading. And if you get a wipeout, you want to be looking at them very closely. I will. I'm like, if we get a wipeout on Bitcoin, I'm going to buy Bitcoin as well. I don't want to be just stuck in altcoins, but I'm going to buy a few altcoins as well. So there's a few setups there, but nothing that interests me right now. So just a little bit of patience.
Good. Let's rattle through some of the happenings in the crypto space. There have been plenty, especially in the last few days, but certainly the week. We can buzz through these quickly enough. The Celsius saga continues. Unsurprisingly, it's only bad news. I don't know if you saw this. Celsius provides users' names and trading history in legal filing.
Jesus
and so
Christ.
like
What?
every single one of their users is doxable now. And you could track their wallet, and it's got their name, and it's just completely extensive at this point.
That is kind of not nice.
Yes.
Jesus Christ.
Celsius asked for the names of its users to be hidden from the court filings, but the judge repeatedly refused on the basis that this is a common requirement for bankruptcy cases. It's 18.6 gigabytes of data. I think it's like a 14,500 page PDF or something. And it's just got like addresses, every single transaction. I mean, it's just absurd. It's, for future hacks, scams, wrench attacks, bad men showing up at your door asking for money. People have already started to track down like influencers and stuff like crypto. Let's assume there was an influencer called the Crypto Bark, who, and let's say there was an investigator called Snack XBT. You can see where I'm going with this. But
Yes.
anyway, allegedly, this Snack XBT found the withdrawal history of CryptoBark, sometime before the platform shut down. But basically, this is it's not even a data breach technically because it's part of the legal proceedings. But it just means users' privacy. This is like one of the biggest doxing events probably ever, right? I mean, this is awful. And it's just got like all the addresses and all the withdrawals, all the trades, and yeah, just more Celsius fallout now, not just financial and not just in terms of entrapping people's assets, but also as far as their security, because this is like a big deal, So a lot of security and other personal information compromised in this. As part of the court procedure, sure, but I don't think that's going to be of any comfort to people whose entire withdrawal trading history and personal identifying information and linking their names to wallets, etc., is out there now for literally anyone to access. Shocking, in my opinion.
That is completely horrendous. Just thinking about what you can do with all of that data is kind of wild. I mean, it's obviously like I look at it from like a standpoint of okay, haha, this influencer guy that dumped on people. I can kind of see how he did it and when he did it and blah blah blah. It's kind of funny, but just from like a doxing perspective, It's just horrendous. You don't want to have your name associated with crypto in general. And you don't want to have people see how much you have, right? Because you become you become an easy target, right?
Yes.
You can see this guy has he has 2 point something million on this address or on these addresses, and you're like, okay, this guy I could do something with. It's not nice, right?
Yeah.
I think this in general, I do not understand how any judge could do something like that.
Well, let's see your anonymous account, right? And then someone finds your wallet, and then boom, you're doxxed.
Yeah.
I don't know, the amount of attack vectors and just exposing sensitive information is terrible, man.
Mm-hmm. I mean, it just opens up so many attack vectors on anyone. It's not even hard. You can see how people trade or whatever. I don't think that really matters too much. It's more about you connect the name to an address, and then if you're from America, for example, you don't have to be as worried to get kind of people go after you. But there's countries in the world where if you have 10,000 euros in crypto and people know, you're gonna get fucked with, right? And crypto is global, and there's countries there where you really don't want to have this public, and
especially now, man.
Yes.
So there you go, more Celsius stuff. Also, this is some sort of flashback reel we're doing. Do Kwon ordered to return passport by South Korean authorities. They've ordered him to return his local passport in 14 days, and if not returned, he risks losing his passport, and reapplications may be rejected. So this comes from the South Korea's Ministry of Foreign Affairs. So Do Kwon seems to be living in a parallel universe. If you read his tweets, he's just still talking about Luna and the ecosystem, and anytime the kind of headline or news comes out about funds being frozen or investigated or Interpol, whatever, he's just extremely nonchalant about it. Be like, oh, this is nothing, or it's not happening, or it's misunderstood, or the media is spinning it, or I genuinely think he's at a point of delusion where he truly believes he's done nothing wrong. He's not culpable for anything, and he should, he's just gonna chill out and have a good time and vibe and build. Sometimes if you just feed yourself your own bullshit for long enough, you genuinely start to believe it and buy into it with the passage of sufficient time. I really think that's what's happened here. I don't even think it's an act anymore. I think he's really bought into the fact that he did nothing wrong and that he's, being wrongly persecuted by all these government agencies looking for some scapegoat, etc., etc. But he really does live in a different version of reality than you and I.
Yeah, the guy is just one of my least favorite people in crypto. He's been before. I've talked about that. You should really not be trusting people that kind of flex their wealth too much. That was before everything went down, right? When he said your size is not size and that kind of stuff before the Luna breakdown. That's usually a sign that people are just completely way over their head and just losing sight of really what they should be doing. And he's not really been getting better, right? You'd think something like this would bring him humility. Is that the word?
Yes.
Yeah, I think. But there's zero, right? I'm not seeing any remorse. which just makes him a prime suspect for repeat offenses, right?
Yes.
I think if you act like this after, like if you acted with humility and kind of said sorry and just tried to make amends, that's one thing. But the way he's been handling this, in my opinion, that is, he should be jailed, honestly. Like,
He thinks he's the victim. Like, unironically, he thinks he's the victim, and he's being like unfairly persecuted and prosecuted and all other p-verbs. So yeah, very interesting. Not a fan of that. And also, my two favorite anecdotes from this. The first is educational. That it's just like a proven thing in crypto. When your dev starts to be obsessed with price, like it's over for the project.
Yes.
That it's like lights out at that point. Also, that complete tangent. You know the Waves dev slash founder, the Sasha guy.
Yes.
Someone linked me a tweet, and you know he's from Ukraine, so he's obviously like affected by the war and the invasion. And some guy tweeted something about it, and then he replied to him being like, yo, send me your address, I'll come fuck you up myself or whatever. So we've gone from like crypto devs just like building stuff and getting billions in TVL to them being just like, no, I'm fine, I'm not going to jail, and or being like, yo, let me roll up and beat the shit out of you. So yeah, definitely an interesting time. There was like a second part to this, but I forgot, and it probably wasn't interesting, so the anecdote is going to have to do. Binance CEO says there's pain and risk in the bear market, but also opportunities. Binance spent $1 billion, or could end 2022 spending over $1 billion in investment deals, and he says that despite risks and pains, there's also opportunity. And yeah, CZ in general has been talking about how a lot of the kind of really scary credit contraction, market breaking stuff is most likely sort of behind us. And while we could get like chop or consolidation or whatever type of unfavorable price action, I don't think a lot of these large exchange owners, at least from their actions, are expecting big like percentage downside or wipeouts, right? Because if they did, they wouldn't be using money to either, you know, acquiring this aggressively or buying distressed assets like FTX has been. In any case, even if it's not like the Pico bottom or whatever, I think most market participants agree that, you know, 20K or whatever deviation below or above it is like a value area for crypto. And I think their actions speak louder than words, or I mean, they're consistent in this occasion, but in general, the way they're acting is pretty telling as far as backstopping the industry and hiring and acquiring and basically putting their money where their mouth is.
I think in general, they kind of look at it from a higher time frame perspective, and like I've been kind of talking on and on about, like 20K is a good price. Might go lower first, but if you're that big, it doesn't really matter too much.
Yes.
You get good deals at 20K. You're gonna get better deals at 14K or 15 or 16K. But if you think it's gonna go up, like it really doesn't matter, right? You cannot deploy fully at 14K. It's impossible at that size. Like if it wicks to 14K, I mean, as if Binance could do all of these deals in those, like in the day or two that Bitcoin spending down there, right?
Hey, wake up! We need to sign this right now. Like the liquidations are hitting the tape. You know,
it's not how it works, right? So they obviously they feel like the bottom is nearing, and then they're gonna start buying, and that's been happening. And I think it's gonna continue to happen. Obviously, it doesn't have to be the Pico bottom, because people are like, oh, prices moved down 10% from where they've set this, or blah blah blah. They're thinking in other dimensions than you are, like not you as in you cred, but you as in the viewer, because obviously they're much, much larger sized than any of us. And then trading or in general, like investing becomes a completely different ball game. But yeah, it's good to see that they're still interested. They don't seem to think that crypto is going to zero, as a lot of like people that have joined 2021 seem to think. So that's a good sign, I think. And you want to kind of do as they do, I think, if you're an investor.
It's almost better off being in NFTs, and those people like don't know what the price of ETH actually is in USD, and they also don't know what their liquid portfolio is. They just know what like the floor price for like one specific collection is, and spend the entire time vibing in the Discord. Like that's just so much better than what we're doing. And again, we've mentioned this every single show, but the irony of the market being more technical than ever, but also people focused more on macro than ever, is absolutely hilarious, and that's going to be an odd one. You know, people are going to look back in hindsight and be like, oh, everyone was bearish, right? Because the technical technicals were so good and they were just looking at TA. It's like, no one cared about TA. We were obsessing over every single Bloomberg headline, PCE, PMI, CPI, all this other stuff, even though it was just like flipping support to resistance for like 2 years.
Yep.
Mt. Gox creditors need to register with exchanges next year to receive lost crypto. They have again January 10th deadline. I think I saw Eric Wall tweeting about this, and the deadline for selection registration is January 10th, 2023. So again, more delays, more inability to stick to deadlines. This has been like the longest and just most drawn out credit process ever. This was relevant for a certain pocket of time. When the market, when there was some speculation this is going to go through and supply was going to hit the market, etc. But the sources for that were really bad. And again, Eric Wall's been really good at, and he's one of the creditors anyway. Poor dude. But yeah, he kind of dealt with that quite nicely. And it just seems like more delays. I'm so bored of this news at this point. I don't know about you. That's been kind of an overhang, or the ghost, the boogeyman in the closet or whatever for the longest time. This kind of Mt. Gox supply thing, and it just keeps getting pushed back for like 5 years now. This isn't like a terribly interesting news article, but I just thought I'd bring it up because it's another case of delays. And there was like a couple of months ago some pretty widespread fear that those Gox coins were just going to hit exchanges, even though that's not how it works at all. And that seems to be, we've kicked the can down the road again on that one.
Mm-hmm. We actually talked about this back then, and we're like, I remember clearly me saying that it's not going to happen, no matter who's going to tell you that it's going to happen, and it turns out it's not going to happen. I think in general, it's something to be disregarded. I don't think it's going to happen anytime soon. And if anything, like if it's next year and it's like prices are still as they are, I think it's going to be a bottom more than anything, which is kind of funny. I don't think it's that big sell event that everyone keeps talking about. It just doesn't make much sense to me.
Agreed. This is some of the short-term catalysts that we discussed at the start of the show. Again, all this is from the block. We love the block. Go support them. They should pay us money for saying that. Anyway, Bitcoin drops below 20,000 following US jobs data. Dollar index soars. So we're still in this paradigm where a stronger labor market is bearish, good news is bad news and bad news is bad news, I guess is a better way of describing it. Crypto prices plummeted following the lowest monthly job figures out of the US since last December. The US added 263,000 jobs in September, above expectations. So this is the thing, right? It's above expectations, which means that the labor market is like more resilient and the economy is in better shape than expected. That also means the Fed can tighten more without the same risk of recession, or with a slightly reduced risk of recession. Or basically there's more slack in the labor market, which means more room for tightening. That's sort of why the market kind of behaves in that way. It all kind of reasons back to how much slack is there to tighten at a high pace without breaking something. And if the labor market looks like half decent, then you can kind of crank it up a little bit. That's the boring macro LARPing stuff there. But as we'll discuss in a second, we can actually bring this forward now. I've got Forex Factory calendar open for next week, and there's some big kind of headline events coming up. There's PPI on Wednesday, but I really think the big one is CPI on Thursday. So the big sort of inflation prints and data coming up in the middle of the week. So that's, if you want a volatility catalyst or some ideas heading into that day, it'll be sort of weekly open, and then the first few days of the week as the market gears up for that. We've seen a bit of a trend that you and I wrote about in Technical Roundup, where the market kind of de-risks going into those events. And a lot of the time it ends up floating to support. And then if the market's more or less in line with expectations and there's no bearish surprise, you get a bit of a bounce. Now that changed the last time it happened, where there was just way too much front running of that behavior, and you didn't get the normal bounce as a result of there being no bearish surprise, right? It kind of got flattened completely. And it almost seems now, in the absence of like a real bullish beat or a bullish surprise, this CPI stuff just seems to be a de-risking / bearish or neutral event at most. I don't know if you've been following that dynamic at all, but I can't, off the top of my head, think of like that many medium-term positive outcomes from any type of inflation data, especially if like anything that hasn't been a bullish beat, which we haven't had in like ever, has all been kind of selly / bearish or mean reverting, and not great for upside.
Yeah, I do largely agree with you. I don't really watch it too closely, just based on the fact that the high time frame's been so good that I don't really need to. And I'm not trading the low time frames right now. But yeah, it's been an interesting kind of world where we just every time we get new data, we've just been kind of like having a candle up, a candle down, but nothing really too interesting. And I think that's probably going to continue. Like you get prices move down or stay neutral, unless there's a big surprise,
Yes.
which there hasn't been. So
That's the thing. I think trading the event is like one of the worst things you can do. Like you either trade before the event on the anticipation of how the market's going to like hedge going into it, or you trade after the event once the stops of the short-term traders and that volatility has been blown out, and you get some decent kind of quotes back in the book, right?
Yes.
That seems to me to make the most sense, as opposed to people who are like there are some very, like Tree of Alpha comes to mind, there are a few others, like very specific catalyst traders who have like very fast information and very fast execution, and will kind of scalp the release itself if it meets certain parameters. I think people who make money doing that are in the minority by definition, especially now that the entire market, like maybe 2 months ago it was easier, but now it seems like everyone's super laser focused on like catalyst trading the thing itself. So to me, if you want to trade around the event, or quote unquote trade the event itself, you want to do it before as the market's positioning into it, or after, once you get the beat or in line with expectations or the short-term volatility and the market kind of settles and stabilizes. So that's kind of, I mean, we'll talk about it more in the newsletter and weekly open, all this other stuff. And even your stream, I think, is the day before, right? So I'm sure you'll have a chance to kind of assess where the market's at. But yeah, in terms of headlines and volatility and data that matters, you've got that coming up. Also, it just reminds me anecdotally, quite funny, how I apparently had a controversial take that CPI was going to be more important than the merge. And that made some people upset, because it was like, oh bro, it's like a triple halvening, switch to proof of stake, etc. And then it was just like 0.9 correlation with NASDAQ, it's like GG, good night. So that's kind of the macro LARPing. Final bits and pieces. You saw the BNB chain got halted, right? There seemed to be like a hack or an exploit. The numbers seem to be contested. I think CZ said it was like 100, 200 million. Other sources are saying kind of 4 to 500 million. Maybe they're calculating in different ways. I mean, CZ was flexing, being like, oh, it's like a quarter of the last BNB burn or something. And I think if I look at the BNB chart, it's kind of retraced most of the dump. I'm not entirely sure. I haven't looked at it today. I mean, yeah, if you look on the 4 hour, you can kind of tell where it. But this is the entire market looking weak now. It doesn't look like outlier type of weak, at least on the daily time frame or the higher time frames. And in general, this has been like one of the strongest coins, right? Like this thing's been holding up like a motherfucker. If you look at the BNB USD pair, but the BTC pair.
Just look at the Bitcoin pair, and then you see that it's actually...
That's the scary one. That's been up only. So, if you're like shorting BNB, I don't know. That's one I want to own, definitely, if I get some good prices. But this thing has just been resilient as hell. So I'm not sure if I'll get the requisite volatility for it. But I think it's a couple things. It speaks to the centralization of a lot of these kind of entities, right? Where you can just like pause the chain. And if you look at their own marketing material, it's like, oh, validators and decentralize this and that. It's like, no, just hit the pause button, At least Solana has the decency to pretend in that sense, because Anatoly will tweet like, hey, validators, get into Discord. We're like, we're doing something. And it just feels more decentralized in that regard. Whereas here it's just like hacked, frozen, and then, CZ wakes up and starts tweeting and the market goes up. But I also think, especially at this point, because we had Ronin Bridge, we had Wormhole, we have this as well. It really seems like bridge infrastructure is dog shit. And whatever it is, kind of a cross-chain as opposed to multi-chain world, that thesis, at least from a security point of view, seems incredibly fucking flimsy. Just if you measure the kind of value they transact versus how much has been hacked, not in like as a direct ratio, but just in general, on a kind of risk-adjusted basis of using these things, they definitely seem to be like a weak point for crypto at the moment, and the magnitude of these hacks tends to be enormous as well. So not terribly bullish on that sector. At least it's not obvious to me that that's turning into core crypto infrastructure, given the risk profile.
And the funny thing is, this is during a bear market, right? These losses would be much bigger during a bull market.
But we just absorb them during a bull market. We wouldn't feel it. So, that's something to bear in mind if you're looking at like infrastructure plays or whatever else. We're not, because we're too dumb. We like Bitcoin, ETH, a couple of the layer ones, which used to be strong in the past, a couple of exchange coins, and, maybe some boomer coins if they're strong enough. But that's that. Kim Kardashian's SEC settlement could complicate her other crypto case and all this stuff about, I think she shilled Ethereum Max. Now, the most hilarious part of this is she said, not financial advice in the tweet,
Yes.
in the Instagram post, and she also said it was an ad. So for crypto Twitter influencers, they feel like that's like a nuclear bunker against regulation enforcement. If you say it's an ad and if you say that it's not financial advice, you can do anything. You can get away with anything. And I think most people knew that that's a bit flimsy, being charitable. But as far as precedents go, now it's very, very clear. There's been some interesting kind of criticism and speculation about Gensler kind of politicizing this, and he had like a video ready to go and all these appearances, and I agree, like it seems he seems more like a political operator in those regards, and maybe he's got some aspirations there. It seems odd to focus on this case, and again, the credibility of this institution when there's still no clear crypto framework, completely incompetent in managing and regulating DeFi, did nothing to protect consumers from Celsius, Luna, etc., all this other stuff, but will go after influencers if it like makes the headlines because it's a big name. And also, we're not going to approve a spot ETF, and people holding GBTC or getting shafted on the futures ETF rollover costs, like, sorry, we've got nothing for you, oh my god, like, talk about incompetence. And I understand the cynicism towards this institution, but it does make me laugh, because I remember when Gensler was announced, people were jerking off, being like, oh my god, he used to do this blockchain course at MIT, that's our guy, and now he's like #1 fucking villain in the world, given how he's decided, kind of run the agency. So yeah, I don't know, I'm sure this scared a few people who've done the old ad not financial advice post about a security here and there, but if you're starting with Kim Kardashian, it's a long way down to go until it reaches some of our peers and colleagues, put it that way.
Yep. I mean, it's just, I think you said it correctly. It seems more like a political kind of move, especially given that she probably made more money than she's going to be fined at the end of the day.
Well, look, she made 250K and she was fined like 1.5 mil or something.
Oh yeah, really? Was she only given 250K?
250K, yeah. I make way more than that, 250K a tweet. What is this, a bear market?
I mean, that is what I was about to say. Like, that's one of the biggest celebrities. Like, why the fuck would she sell out for 250K?
Maybe she was just really bullish Ethereum Max, so she would take anything. She believed in the token.
I honestly think she probably didn't know. I think most of these sellers just don't know. They have like their team do it, and they just get free money basically.
Yeah, I remember we talked about this years ago. I was like, look, if I were like some celebrity social media manager, you take a cut. You can kind of play it and say, oh, they offered you 100K, or if they offer 250K, you say they offer you 200K. Then you pocket some of that, you run the deal, you run the tweets, and then, hopefully you're not an assistant, as long as the bull market lasts long enough.
Yep.
But yeah, this just seems like a publicity stunt more than anything, to be honest, and the SEC isn't serious, but it should be serious, and Gensler is just, I don't know, this is low-hanging fruit is being charitable here.
Yeah, I mean, totally agree. It's just, I mean, there's more outrageous things anyway in crypto that you should be going after.
Yeah. But those are too technical and it's easy to ignore. Like, it's easy to go after a celebrity, but then actual protocols, which you need frameworks for, it's like, no thank you. Final bit of news, FTX to launch Visa debit card in 40 new countries. This is cool. Because, like, at face value, I've said it again, I have to take a shot now. But, like, when it comes to these things, when people talk about crypto use cases, and it's like, oh, it's this cryptocurrency, it's a digital money, and then no one ever spends any of it at all, and there's no convenient or comfortable way of spending it in your day-to-day life. It just makes it look like even more of a Ponzi than it is, right? You can at least have this face-saving use case that, hey, but look, I've got my crypto card, they can pay stuff for it. And you remember, like, last bull market, so many of these crypto cards were complete garbage. And then even the ICO bull market, there are a lot of crypto cards that just got shut down. It's just been a real kind of sticking point for the industry. It's better now. I know Coinbase has a card, and Gemini has or had one, and now FTX has got one as well. No rewards on this one yet, which I'm sure they're working to fix or are in the process of fixing. But yeah, look, if we get credible, non-speculative use cases for crypto or crypto-associated projects brands, I think that's just a net plus, because the whole place is just filled with rampant Ponzi schemes, insider trading, market manipulation, complete Fiverr artist, NFT, derivative, dog shit, etc. Like the least we could do is afford ourselves the courtesy of making it semi-usable as some form of day-to-day money in some countries, and even that's a facelift compared to what we're used to. So good on FTX, and maybe they'll send us a couple of these.
Yep. I mean, that's basically, that's what everyone's been kind of asking for. Right? I mean, I still remember like in 2017, 18, all these ICOs that promised like cards. And they went
Hanks,
to like
MCO, yeah, man.
Yes, all of them, and they all went kind of belly up. So it's kind of good that we get some that will actually probably stand the test of time. Like I would be surprised if the Coinbase card or the FTX card didn't work. They're just going to. So that's good. At least some like legitimacy there. You don't have to go to a dodgy kind of ICO that make a shitload of money by raising and then just kind of abandon you with a shitty product that doesn't really work. So good for them, good for all of us, I guess. I'm not really going to do anything about crypto market structure or anything of the sort. It's just going to be good for the next bull market, I think. Like a lot of these
things... We do a little obfuscation of our Ponzi schemes.
Yeah. A lot of these things are just like setting up the next bull market. That's kind of what you have to realize when you trade this thing, is that these good news, right, during the bear market, they're just like, so you can sell better during the bull market, and we're not there yet. So yeah, gonna have to wait for it a little bit.
This final piece is sort of macro LARP related. There's like this custom where a lot of the time the Fed will sort of telegraph their moves through the Wall Street Journal in order to kind of calm markets or give them some sort of baseline expectation. And so this one says this September jobs report is likely to do very little to change the Fed's official outlook 2 weeks ago that they would lean towards raising rates by a cumulative 125 basis points at their next two meetings. Now, I'm not a quant, but I think that's 75 plus 50.
Yes.
So 75 bips on the upcoming one, and then 50 after that, and then that's sort of the market's expectation. I think 75 is being priced quite heavily for the next meeting also. So as far as Fed pivot goes, like you have to consider, what would the counterfactual look like? The counterfactual would look like a month-on-month CPI is either flat or trending down, and the rate of hikes is also slowing down, and then you get some sort of, like commodities, etc., chill out, dollar chills out, and you get some sort of like bullish market structure and failed breakdown in the S&P, then you're in fucking business, right?
Yes.
You can make a really clear case that there's a trend suggesting that inflation has peaked. There's a clear shift in behavior when it comes to tightening versus easing, or at least the rate of tightening. And then the market is supportive of that, or seems to be forward-looking in that regard, or pricing it in, because there's a shift in behavior from just downtrend rolling over to some absorption and bid coming in. We have none of those things at the moment. Maybe if we get some of them, at this point it'll be pretty obvious when we've had a positive development, but the kind of fairy tale, Goldilocks, peak inflation, early pivot, dovish, etc. scenario just isn't supported by the evidence at the moment, and I don't think, at least from the available evidence, this upcoming CPI is going to do anything to change that.
Yep.
Don, I think that's enough LARPing. What do you think?
I think so too. We've done our job.
We've done our job. Wonderful. Again, thank you to FTX for supporting the show. FTX app available wherever you have a mobile phone. All those app store things: portfolio tracking, spot trading, swap from one asset to another, panic sell, panic buy. Can't get liquidated on there, which is great. And be sure to check them out. Links available in the description below. Don't forget, next week, usual packed week of content. Monday markets with me, my 15-minute lazy video, because I'm not like Don, who's kind-hearted and engages with you folks. trletter.com weekly newsletter comes out on Tuesday, usually in the first half of the day UTC. We'll be updating our FUD on the S&P 500 bearish retest, maybe some clout collection, maybe some big week ahead I emoji, 100 emoji type of analysis. Don stream on Wednesday, and then we'll be back for Casual Friday in a week's time. Have a wonderful weekend, trade safe, all sorts of economic calendar, whatever things coming up, but we'll be there with you every step of the way, sharing in your liquidation. That's all from us. Take care. Don, thank you, and we'll see you next week.
Bye-bye.